Well, there was some weakness in stocks last week. Does that mean we are starting another wave of stock market crash, or is this just a little pullback on profit taking after a pretty good month higher? Well, I'll analyze the markets overall, try to give you some things to think about, and answer the question, are we likely to see more weakness? Plus, I'll do my regular analysis of the markets, of crypto, of the commodity market, and the day trade of the week on GCT. So we had some weakness in stocks last week. Does that mean we're ready to see more weakness in the markets in general? Well, there's a few things to think about. First of all, remember last week I talked about how there was a break higher in interest rates, and it was likely that it would cause interest rates to rise this week and cause some weakness in the market as well. And we saw exactly that play out. So I'm going to show you those charts in a minute, and you'll see why I was able to make that prediction and where we are likely to go on those things next. Another factor is with those rising interest rates comes a rising US dollar, and we saw that last week. And that's an issue for those foreign economies that have US dollar-based debt, because it becomes difficult for them to pay back their debt, and you could have the risk of default. Now, I don't think we're there yet by any means, but it is a factor that weighs on the market. I think one of the biggest things, though, is that last week we really shook the confidence of the retail trader, because many of those retail traders, those smaller people trading at home, not a lot of capital, they're trading Bed Bath & Beyond among other meme stocks, because these things were very, very hot, made big moves. I'll show you a chart of that in a moment. And then it collapsed. There was an activist investor. He decided to step back from that deal, and the stock collapsed. Let's take a look at that chart really quickly. This is the chart of BBBY. And you can see at the end of July, it was around $5. Well, it went all the way up to $30 on Wednesday. By Friday, it was back down to 10. And it traded a lot of volume. So there's a lot of people playing that, and that means a lot of people took some big losses or are sitting on big losses right now. That hurts psychology. And then you had weakness in crypto. I'm going to show you a chart of Bitcoin in just a moment. You're going to see that that too had a contribution to weakness in that investor psychology, that retail trader psychology. So those things probably contributed to some of the weakness in the market. But the biggest factor is that we had the rise of interest rates, and also there's a technical factor. Let's take a look at the chart of the NASDAQ 100, and you can see that we have risen up to that downward trend line. I've just drawn a line across the top, across this top, and we've hit that resistance level at that downward trend line. I talked about that last week as well, and it's just a natural thing. When you rally into resistance, price usually gets stuck at resistance. So we've got a number of factors at work here, and I think that really motivated some profit taking. I don't think that the sky is falling just yet. I think there's some caution warranted. As we go through the charts in this week's market analysis, I'll give you a little more insight into that. But again, I think it's very natural to have a little bit of profit taking, a little bit of a pullback after the gains we have seen. Unless we really start to build falling tops, accelerate to the downside with some strong volume, I'm not going to say that a major crash wave is coming again, but rather at this point, it's just a little bit of profit taking. All right, let's take a look at the important charts of the week. And here you can see that chart of the S&P 500. And again, we draw a trend line from the highs across those tops. We've risen up to that. It's very natural that we're going to pull back from that. Because this rally has come from a new low and not from a rising bottom, it's actually not very healthy. So if we have a few weeks of weakness, build a rising bottom, and then break this downward trend line from a rising bottom, that's a real positive. If instead we go all the way down and break through support, well, then we're probably headed to this level. Again, I don't think that's going to happen. We had an emotional sell-off here. We went parabolic to the downside. We've recovered very nicely. Our stock scores have improved a lot, and I think we're due for just maybe a week to 3 weeks of weakness, a little pullback, build a rising bottom, and then rally. Remember, September is normally kind of a weak month for the market, and we're going into September, and I think that could motivate a little bit of that selling pressure after a summer rally that could lead ultimately to that build of a rising bottom, which is good, and then we'll take another stab at breaking that downward trend line. Let's take a look at the short-term chart of the S&P. I'll just jump on this 1 month chart. And there you can see a very short-term upward trend line. Again, this is a 30-day, 120-minute chart. We're breaking the upward trend line from a falling top. That means we're likely in the short term to move a little bit lower. Wouldn't shock me at all, and I think it's healthy because it cleanses the market of some sellers. It motivates buyers to come back in. Weakness is good. It generates the buying interest for the next wave up. All right, let's jump over to the Canadian market, T.XIU, and we'll start with the 3-year weekly chart. And similar situation here. We've got this downward trend line, but in the case of the TSX, it's actually broken that downward trend line. No rising bottom, but that's a little bit more positive. And the reason the TSX chart looks better than the S&P chart is, of course, there's a lot more oil companies in the TSX, and oil had a pretty good week. We'll show you the oil chart in just a minute. Now let's take a look at the 1 month chart. We'll make this a 60-minute. And there you can see that the upward trend line hasn't really been broken here. And again, that's coming from the support of that oil market, which had already seen its own profit taking in the last little while, and now it bounced back last week. So really we only had the 1 day of weakness on the TSX because earlier in the week it was being propped up by oil. All right, let's move along to commodities. Let's take a look at gold first, GLD. You can see weakness in gold. When we look at the US dollar, you will understand why, because the US dollar went up. That puts pressure on the price of gold, and that's exactly what we saw. So the trend here on the daily is down. It's in a downward sloping channel. I think we could come down to the bottom of that channel. Wouldn't surprise me at all. So I'd be pretty cautious with the gold market. And if you look at the longer term weekly chart, you see that we're breaking down from another falling top. This is called a flag pattern. So you're in a downward trend. You bounce back. It's kind of a sucker rally. And then you roll over and likely to go lower. Stock scores have been low for a while, and they are still low, and therefore, again, be very careful with gold. Now, interesting, USO, which represents oil, had a decent little bit of strength late in the week, this past week. So if we look at the 1 month, 60-minute chart, you can see a little bit of a jump in oil, but big picture, it still hasn't broken this downward trend line. Predominantly, we're sideways over the last month. And we're actually building some pessimism. So although we've risen up to this in the last 2 or 3 days, we're probably going to come back down here, and that could put a little pressure on the TSX. Let's take a look at the 3-year chart of oil. And there you see it's not too bad yet because this long-term upward trend line is still intact. We got way overextended. We're working our way back. And if we continue to work our way back to the trend line and bounce, that would be normal. I think ultimately oil is probably going to go sideways in this zone for the months ahead. And that'll take some of that pressure off of inflation. That maybe changes the motivation to raise interest rates by central banks. That could be good for stocks, but we do need to see that stability come into oil, or even a little bit of weakness in oil would be good. All right, let's jump to some currencies. UUP is the symbol I like to look at for the US dollar. And there you see that strength. So the US dollar was up sharply. For oil to hold its gains, given the strength in the US dollar, because of course oil is priced in US dollars generally, that's good for oil. Like oil did an impressive performance. Unlike gold, oil did not really sell off. In fact, it had some strength at the end of the week. So why this is moving up is because interest rates are moving up, and we'll look at that in a moment. But let's first take a look at crypto. GBTC is the Bitcoin ETF. And there you can see the weakness through the week and a big gap down on Friday. And again, I just think retail trader confidence was shaken a little bit. I'm sure there were some other things that motivated this to move lower, but it's not a good thing when retail traders are buried in these things and they're losing. It creates a negative psychology, and that could affect those lower price stocks in the near term. So the Russell 2000, the small cap stocks, they're driven by retail traders. And if retail traders are in a bad mood or they're losing money, you're going to see less action. So I think in the short term, be a little bit more cautious with short-term trading of those hot stocks. They're not going to get the same kind of follow through until the market stabilizes, until confidence returns. All right, let's take a look at that interest rate chart now. TBT is what I like to use, as I always talk about every week. And there you can see What I talked about last week was the break of the downward trend line, and that was an indication that this was likely to move higher. And it took until Friday, but Friday we had a pretty good jump higher, and I think we could see it move up into this range here. If it instead moves up, builds a falling top, and then starts to test these lows, well, that's a good sign for interest rates going lower. If it moves up and hits resistance, then it may be building a pattern like this, which ultimately could lead to longer term strength. So there's some things to watch out for. If you're subscribed to this channel, you turn your notifications on. I put these videos up every week, so turn on that notifications bell so you don't have to wait or be checking all the time. You'll just get an email when I upload that video. All right, let's jump over to my ratings then. So US stocks, neutral on both time frames. That's a downgrade. Canadian stocks, neutral long-term, bullish short-term still, but I think we could see some weakness in Canadian stocks next week if oil continues to pull back a little bit. Gold, long-term bearish, short-term neutral. Oil, neutral on both time frames. US dollar, very bullish long-term. I still rated it neutral short-term despite the strength this week. It's still in kind of a sideways pattern for the month. Bitcoin, long-term bearish, short-term neutral, a little bit oversold. We could see a little bit of a bounce in the short term. And then interest rates, long-term bullish, meaning long-term trend is up on interest rates, but in the short term, neutral. All right, let's jump over to the day trade of the week. Day trade of the week is an example of a stock that I look at each week as an example of what we day trade in our active live service at Stockscores. And this week, it's more of a hit and run trade because the market was not helping us late this week. In fact, it was hindering us. And so you do shorter trades, not trading for the big gains, but just trying to make some income off of these trades. So GCT was a very active stock. It is a new listing. It started, showing lots of action at the start of the day. Very volatile. The low here was $25. The high there was $42. That's in the span of 10 minutes. So very volatile stock. But it had the setup here for what I call my pullback play or my intraday pullback. It broke the pullback. It made a message candle, breaking a downward trend line. So entry here, support here, and then just plan to take your money and run. It comes up to resistance, take the money and run. And using that philosophy, here is the economics of the trade. For every $100 of risk, you buy 20 shares, not a big position, $917 of capital. Because it's a $40 stock, you should be able to leverage that trade 3-to-1, which means you only have to put up about $306 to take that 20 share position. It only earned 2 RR. So here's 1 RR, here's 2, but still that's $200 of profit for every $306 of risk. That's a very nice 65% return. And you could do that on this stock because it was so volatile. You really have to lower your position size on trades like this because the risk down to support is so big, and you have to give it that wiggle room. If you use stops that are too tight because you're trying to plan to lose what you're willing to lose instead of buying the position based on what you're willing to lose, well, then you can have too tight a stop. You end up getting stopped out. It's frustrating. You got to know where to put those stops. And in this case, it had to be pretty wide. Way down here, the stock did pull back a little bit, would have shaken a lot of people out, but having that wider stop kept you in the trade until it came up to resistance. You expect it to get stuck there, especially late in the day, and so you take your money and run. I call it a Steve Miller trade. Go on, take the money and run. Hope you've enjoyed it, and if so, click the like button, subscribe to the channel, leave a comment on where you think retail trader stocks, those meme stocks, Bitcoin too, but GameStop, Bed Bath & Beyond, AMC. These stocks have been quite hot in recent weeks. Do you think it's over for them, or do you think they'll make a comeback? Let me know in the comments. Hope you've enjoyed this week's video, and trade well.